Segment of BIS Commodities. Just taking a look at the week in review. Let's just start out and see where we closed for the week. Starting out in the grains, corn closed 8 cents lower in the July contract at 447. Rolling on over to the Dees, just shy of 4 cents lower at 462. Soybeans took a beating this week on the front end, down 27 cents on the week at 14.25 3/4. New crop beans, November beans, actually closed 3 cents higher on the week at 12.21 on an inside week, meaning we didn't make new highs nor new lows this past week. Wheat down 32 cents in the July contract at 5.86, still feeling some pressure there. Live cattle for the week up $7.33 in the June contract this week at 147.50. Looks like we're going to post the close this afternoon. June hogs up $1.25 this week. Today is the last trading day for June hogs at 115.82 is where we close. The June contract, that is the July contract, closed at 127. That's what cash will be based off following or starting Monday. Energy is also explosive on the week, obviously due to the political tensions or the terrorist activities in Iraq. It's the highest we've seen. The front end of the oil contract closed. Currently looks to close somewhere below 107 this week. It'll be the highest since last September. The big news this week is in the grain market was the monthly supply and demand report. Was anticipated somewhat of a ho-hum report, and that's how it came in as well, as the trade was looking for a subtle change in a carryout for both old crop corn and old crop beans. And then actually the WASD left it alone. They didn't incorporate any changes whatsoever. The trade was looking for maybe a bump in old crop stocks, but it seems as if we deferred on that to the big report at the end of the month. But we did close at a 1.14 billion bushel carryout in old, and still at 1.7 in the new crop. Beans, pretty much the same thing. We did see them increase the crush and the balance sheet for old crop beans. Thus, we reduced our carryout to 125 million, down from the 130 from last month, and we just carried over that smaller ending stocks number in the new crop balance sheet at 325 million, down 5 million from 330. The big thing left in the greens at this point, it looks like, is obviously the weather. The weather is going to be the driving force probably for the next few weeks until we see our stocks and acreage report at the end of the month. But as we go home right now, a fairly benign forecast. Different weather models out there. Some are showing a little bit of heat in the deferred 11 to 15 day forecast, but the European model is a fairly benign forecast, and it has been the more accurate one to this point. The other things to keep an eye on is our commitment of traders report, which shows that the managed funds are still long this week for corn and beans. And even though we're probably going to see a drawdown on those longs, we're still going to be sitting at a very long position, taking a look into the forecast. And if we can get ourselves into that pollination period with no weather surprises or any type of weather bullish play, the question is, will we see the funds liquidate their existing positions and possibly decide to go short or not? Or will we get a weather forecast that will reward them and cause them to want to come back and own some more futures? That's obviously going to be the big thing in the market over the next couple of weeks leading up to the report at the end of the month. Taking a look at cattle futures for the week, the cattle market, it was all about the cash market. Cash exploded higher this week, $2-3 better than last week. Seasonally, we're looking for weakness in the cash market. We have not seen it. We've only seen cash continue to build the last 2-3 weeks. Excuse me. And it's causing obviously some major short covering coming into play. taking a look at boxes from this point forward, we do see the seasonalities kick in that from the middle of June to the middle of July, boxes tend to sell off, as most of the buying we are assuming has been done for the holidays. We may have seen that's including the 4th of July and Father's Day. We've seen a fair amount of maybe pent-up demand here the last few weeks, and many analysts had looked at the cattle on feed numbers expecting numbers to drop, and we did have a 605,000 kill this week. But if we need to maintain futures to cash, and if cash is trading north of 150, we're still trading at a discount to cash. So certainly some covering going on, and we're going to continue to see how cash trades. Cash is the leader in this thing. It will continue to be, in my opinion, for the next few weeks. The hog market, somewhat of the difference to the cattle market, where in the cattle market we have a premium in the cash versus futures. It's the opposite in the hogs, even though we are seeing the June contract and cash hog contract coming to converge here towards this last day of the, we'll wait and see how our cash index closes next Tuesday. But the interesting thing moving forward is July is trading at a $12 premium to June right now, and about a $14, $15 premium to the cash market. Are we going to see a surge in cash prices, or are we going to see those Julys converge as well? Everybody's aware of the smaller numbers that are taking place. To this point, we haven't seen quite as dramatic of a sell-off or a drop-off in numbers that we had expected, and we have made up for that with the larger carcass weights as well. But the trade did see new contract highs in the deferreds in the August, the Octobers, in the October hogs and the December hogs this past week, as somebody feels that the tightness from the PED virus is just going to extend more so into that time frame versus the nearby, yet to be seen or determined. Obviously, the equity market continues to find strength, and find strength in any type of weakness, but the energy markets is certainly something to keep an eye on, and it's interesting to see if some of the political tensions that is going on in the Middle East right now, that'll spill over into the grain markets negatively or positively. Something to keep an eye on, along with the weather forecast. If you have any questions or thoughts about these markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.